Hello everyone, welcome to today's YouTube video. I know I'm in a little bit of a different spot. Don't worry, it's going to cut to the actual video, but I'm going over risk management, my specific rules that I have for risk management, and then journaling, exactly how you're supposed to be journaling so you can understand your win rate and your risk to reward ratio without just going into the markets and completely guessing. You guys miss this step. So many people miss this step. It is so important. So let's get right into it. Thank you guys so much for watching and supporting. All right, hello everyone. Welcome to my risk management video. So in today's video, I'm going to be going over my golden rules and the rules that you should always set for yourself within risk management with trading. And then we're also going to go over my personal trade log, how I log down all my trades, and the type of journaling that I do. So let's get into risk management first. So one golden rule in the first one is never trade with money you need. If losing it stresses you out or affects your decisions, you're not managing risk, you're just gambling. So never, ever, ever trade with money that you need to use and you're going in and saying, oh, I'm going to double this so then I can have even more money to pay for something that I need to pay for. Never, ever do that. Do not treat trading in that sort of way. That'll put you on the fast track to having that gambler's mindset, which is not what we want. So the next rule, which is obviously something you can, change around a bit, it is determined upon you, but set a max risk per trade and respect it. So stick to risking 1 to 2% of your total account per trade. Anything more and you're one bad trade away from damage control mode. So what I mean by this is when you go in with a normal position size, your risk on that position size should never be more than 1% of your entire account. So if you have an $1,000 account and you go in with a set position size, you should never be, risking more than 1 or 2% of that account, because you do not want to have to try to recover gains after losing half of your account. That is going to put you in a really bad place and a really bad mindset as well going into trading. So third, and something that is really important and a lot of traders skip, is knowing your risk to reward ratio versus your win rate. So high risk reward and win rate go hand in hand. So if you have a high win rate but a low RR, you win often, but you have to be consistent and disciplined, because one big loser can wipe out 3 to 4 wins if you over risk on that losing trade. A lower win rate and a higher RR, you will be winning less often, but your wins are bigger. So you need thick skin for losses and patience to wait for the right setups. So going forward with this, for all my beginner traders, I always recommend trying to set a goal of a higher win rate and a lower RR, going for base hits, base trades. Because if you're trying to go and shoot for the stars and the moon and you're taking a lot of losses in the process, that is going to absolutely drain any sort of trading skills that you have learned. That is going to drain you so much, because you're going to get into this mindset of like, oh, I'm not good at trading because I've lost this many trades and I can't seem to take a win, and this, that, and the other, trying to catch those high risk to reward ratio trades. It is not a good mindset to be in. So keep that in mind. As a more beginner trader, I really recommend, trying to stick with a higher win rate, like focusing on your strategy that will give you a higher win rate, and utilize that to your best advantage and just take those base hits. I know when you're a beginner, all these big wins over 200-300% on an options trade, that's all you want to do. No, like, you really don't have to do that. Base hits are going to be your best friend. Plan your stop before you enter. If you do not have a stop, you are not trading. Do not trade. If you don't know where your trade is invalid, you have no business pressing the buy button. This is really important. Now, we all have risk managements. We all have areas where we do stop out. But the most important thing is, like, even if my stop loss doesn't get hit, but structure breaks, my trade is no longer valid, I'm not just going to hold and wait till my stops get hit. I see that structure is invalid. Maybe I'm only down 5-10% on that trade. I'm still going to cut it, because there's no reason for me to lose anymore and stay in a trade that is now invalid. Cut losers fast, no hope allowed. So hope is very expensive, and I talk about this all the time in my community. I have so many people that say, oh, I hope it's going to do this, I hope it's going to do that. The market does not care about what you hope for. It does not care. If it breaks your level, cut it without a hesitation. Hesitation ruins risk management and waiting in those trades. And obviously, I don't mean like as soon as you're down 3%, cut your position, get out of it. I don't mean that, but I mean kind of going into, number 4, same thing as number 5. If your trade is now invalid that you're currently in, you should exit it now. And respect volatility. The higher volatility, the smaller size should be. Don't size like it's SPY when you're trading Tesla or Nvidia. So you don't want to be sizing up on, highly volatile stocks, especially, I guess, something like Tesla or Nvidia are highly volatile. Obviously, SPY can be very volatile, especially if you're trading zero-dated options. So in this case and scenario, it just depends. But next one is never add to a losing trade. Literally never do this. I have so many people ask if, I add to my position once I'm down. No, I always go in with the position I know I want to be in, always. And from there, I take profits out. I will never buy more to, size in to a losing trade. That doesn't make any sense. I will never, that is not something I will ever do. Once you're already red in that trade and you try to size in some more because you're like, oh, like, let me, it's giving me a better price, let me just get in. Do not do that. Do not do that. Number 8, use a daily max loss limit. So set a firm daily drawdown limit, 2 to 3% of your account. If you hit it, you stop. This protects you from spirals and revenge trades. Yes. Please, 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 please do this. Have whatever risk you have set in your mind, whatever it may be. Please do this. Be cautious with zero DTEs. So zero DTEs are fast and unforgiving. It will give you a very high risk to reward ratio, but this is not for the weak. This is not for beginners. Do not go in with zero dated, options if you are only a beginner. If you're not quick to cut trades, trade safer expirations like 3 to 5 DTE. That is obviously what I recommend. I even, most of the time on QQQ, I'll go in with 1 day out contracts just to be a little bit safer. Protect your mental capital. If you're not in the right headspace, sit out. Burnout leads to breakdown. Trading requires mental clarity. If you're not in the right headspace, and I tell my students this all the time as well, that will affect your trading no matter, how disciplined you are with trading. If you are feeling like terrible that day or something bad happened that day and you are not in the right mindset, do not go and trade. You are bound to, not end up having a good day. Size down until you're consistent. Earn the right to size up. Start small, master your system, then scale big. Big size without control just amplifies your flaws and your issues within trading. Yes, I hate when I see beginners go in with like a massive size. What are you doing? You are not in the place to be taking a massive size on a options position when you are just a beginner. So please do not do that by any means. But those are going to be my golden rules. So now let's get into a little bit of journaling and why journaling is so important. Okay, so now for journaling, let's get into it and, how exactly I journal my trades. So this is the format I give all of my students to work with, and they're available to share it with me. But basically how you're going to do it is like, when you first start logging your trades, trade number 1, what's the date? It is currently July 17th, 25. So then you're going to do trade taken. So let's say for today, let's log the actual trade I took today. So I took QQQ 557 put. My risk amount was negative 25% on that position, and my profit on that was actually pretty low. It was about 400. So emotions felt before, during, and after trade taken. Explain the setup and why you took it. Gave your rating A through C. So this is how I like to do my trades personally, but emotions felt before and during. Before, I was just waiting for the setup, felt confident during the trade, started to see QQQ go in the opposite direction, was contemplating exiting. After got some nice profits out, but not what I expected. Setup was actually an A+ setup. Everything was aligning. Trade just didn't end up going my way. And today, if you were trading the markets on July 17th, you know that QQQ kind of had slow grind upwards. So I did take puts early in the morning and then exited most of my contracts for around 15 to 20%, and then the rest of them at break even. So setup was A+, trade just didn't go my way, and now I'm out of that. So next thing is you could do the date and P&L for the week, and this is all color coded. So let's say you took a loss as well today, it's going to be red. And same with P&L for the week, 500, negative 330, I guess. Those are going to be color coded, which I really love. But obviously, I would just copy this specific trade log how you want it. But you have to fill out your trades every single day after you take your trades, after the markets close, after you're done trading. You have to do this, and you have to look back at it and realize, what did I do incorrectly? What did I do well? What needs work? All of that good stuff. If you don't do this and you don't understand why it's so important to journal, you're not going to get better at trading, and you're not going to become a profitable trader, because you wouldn't even be able to tell me what half of your trades look like, what the average win rate you have, what the average RR you have is. You would never be able to tell me that, because you don't even journal out your trades. You treat trading as it's like some sort of hobby or something. Don't do that. So next sort of log I have as well is logging your skill categories. Were you patient? How is risk management, setup recognition, execution speed, journaling habits, and confidence? So what is your current rating on all of those? And what is your goal? Obviously, everyone's goal is to get to a 5 on all of these skill categories, but it just, depends. And then notes or evidence from, trades that you were taking. So also write that down. And what is a priority for you right now? Maybe your risk management was really terrible, so that is going to be a main priority for you, but your journaling habits were actually good. So not so much a priority because you have that down. And then weekly trade review and best trade, worst trade, top mistake, top win. All of these, I'm not talking about like, oh, what trade did you make the most money on? What trade did you lose the most? I don't care about that as long as these trades were A+ setups, all your confluences aligned, you had full confidence in yourself, you had good conviction, and you weren't trying to bag hold your trades, you weren't trying to over risk on your trades. That's what I'm looking for in your best trade. Even if it was a losing trade, but you still followed absolutely everything you could and did the best you could, that could be your best trade. It doesn't matter. You guys have to stop thinking about like, my best trade is because I made this or X amount of money. I don't care how much money you made on your trades. I couldn't care less. So start focusing on that and focusing on trading in a different way versus focusing on trading as I need to make this or X amount of money. And then top focus for the next week. So your focus for the next week, whatever, you need to work on, whatever went really poorly this past week, that's going to be your top focus. And any emotional patterns noticed, this one is really important. That's going to help you actually be able to control your emotions in trading. Maybe you get really greedy at times. Maybe you don't have any confidence when taking your trades. Maybe you have a really large ego and you think you're always right. I don't know what it is, but write down your emotional patterns that you had noticed. But that is how you should be journaling. This is the exact log that I use to journal. There's also obviously different apps and websites you can just link your broker to, which I do as well. But I really like this because it makes me sit there and like think about it versus just like having an AI or whatever, or a website do it for me. Like, that's great and all. I can actually see like real stats from that. But this actually makes me think about the trades I took, think about what could be better, what went well, what went terribly, all of that good stuff. But anyways, thank you guys for watching, and I will see you all later.